What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts. And well, folks, the stock market is officially doing that thing your drunk uncle does at Thanksgiving dinner. It's leaning back in its chair like everything's fine, but one wrong move and the turkey's on the floor, and your mom's having a panic attack because she spent, quote unquote, 8 hours preparing this meal for everybody, even though she hates half the people there. The Nasdaq, fresh record highs. The S&P 500 practically pressing its face against the glass ceiling. And traders, they're acting like rate cuts are basically a done deal, which is adorable. That's adorable. But Jerome Powell hasn't even RSVP'd yet. So I don't know why we getting happy, folks. All we're seeing is the CME Fed Watch tool increase the odds of a rate cut coming here in September. But remember last time we cut too early? Yeah, that happened. By the way, the head of the IRS just got fired, so nobody's safe. We could see a coin flip and the market flip next week. However, this week, it's all about the consumer price index, or as most people call it, CPI. You know, the monthly inflation report that either makes Wall Street break out champagne or roll under their desk crying into their Bloomberg terminals because their job's on the line. So let's talk about what is going to move the markets this week. First things first, the CPI Showdown. On Tuesday, we get the CPI print, the single most important piece of economic data this month. If inflation comes in hotter than expected, September's Fed meeting won't be a cut party. It'll be a not so fast buddy moment. Right now, expectations are as such. Headline CPI is coming in at 2.8% year over year. Core CPI is coming in at 3.0% or 3%. Why 3.0%? Oh. And the monthly core number expected to tick up 0.3%. Translation, inflation's not dead, folks. It's just wearing sunglasses and pretending it's on vacation, kind of like when the Grim Reaper goes to Costa Rica. Economists like UBS's Alan Dedemeister are warning tariffs could push that core number towards 3.5% by the end of the year. Whew, that's not good. That's not mission accomplished. We may need to keep the troops there another decade or so. Now, what's the playbook for this? All right. Hot CPI, rate cuts are delayed, yields are up, and growth stocks will sulk. If we get a cool CPI, however, rate cuts are still in play, and tech stocks might throw another rave, that is. Now, the next thing we have are on Thursday, we get retail sales and PPI. And here's why that matters. Consumer spending is 70% of the US economy. If people stop buying stuff, it's not just a recession signal. It's basically the bat signal for the Fed to cut rates. Expected retail sales month over month, 0.5%. And that's versus 0.6% from last month. Control group, which feeds the GDP, plus 0.1%. With autos, yeah, that's a little sadder number because without autos, it's going to get ugly, like two cousins kissing, baby. And PPI month over month is expected at 0.2%, an early warning for CPI in coming months. Strong retail means inflation pressure stays sticky. Weak retail means Americans are tightening wallets faster than a millennial canceling a bad Tinder date. The playbook here, strong numbers, inflation risks sticks, rate cuts harder to justify. And if it's weak, faster cuts, small caps should shine here. So watch out for that IWM iShares Russell baby 1, 2, 3. You know what that means. Yeah. Now, next thing we have is Fed politics soap opera. And no, I'm not talking about the Real Housewives. I'm talking about the Federal Reserve. Meanwhile, over in DC, Trump just nominated Stephen Moran to the Fed board, a guy who likes looser policy and a weaker dollar. And according to JP Morgan, if Moran gets confirmed before September, Powell could face 3 dissenters if he doesn't cut rates. It's like telling the referee, you better call that foul or you'll be replaced by a ref who will. That is insane. Welcome to the NBA, folks. Da-na-na-na-na-na. This isn't just economic policy, it's political theater. And like all political theater, the ending is predictable. Money gets cheaper before an election. Now, next up, we have Speculation Nation. Oh, so outside of the macro circus, the market is acting like it's 1999 with a shot of espresso. Nvidia is trading at valuation last seen when Microsoft was still selling Encarta CDs. IPOs like Firefly Aerospace popping like it's .com 2, Electric Boogaloo, Bitcoin at 118K, and altcoins ripping like everyone collectively forgot about 2022. Strategist Richard Bernstein says speculation ends one of two ways. Fed hikes into hot inflation, which equals liquidity dying out. And that's not good for anybody. Fed cuts into collapsing economy. No one's buying Bitcoin. They're buying bread at that point. Right now, we're in that dangerous sweet spot where both feel possible. Now, this week's calendar, some quick hits for the week so you don't have to look like a fool at the trading desk. Tuesday, we get CPI plus big earnings like Kava and On Holding. Thursday, we have retail sales, PPI, and Deere and Applied Materials earnings. And Friday, we have industrial production plus consumer sentiment, aka how miserable we all are this month. So again, we have MBA applications. We have Intel, Cisco, Robin on Wednesday. Tuesday, we get Circle, Pony AI, CoreWeave, Rigetti, and Kava. Thursday, we will get JD, Deere, Advanced Auto Parts, Birkenstock, and Nucor. We're also going to have initial jobless claims as well. We also, on Friday, no major earnings and just that depression report. So here is the trades and gains plan, folks. Hot CPI, defensive sectors, raise cash. Cool CPI, add to growth, lean into momentum. Retail sales equals the stealth driver, so don't ignore it. Gold and Bitcoin equals volatility play while tariffs stir the pot. And the bottom line is this week is data versus narrative. If inflation stays tame, the Goldilocks story lives to fight another day. If CPI runs hot or retail cracks, this rally could start coughing like it just ate a gas station hot dog. Stay sharp, trade smart, and remember, in this market, the only thing scarier than bad news is good news. That makes the Fed nervous. If you made it this far, make sure you like, subscribe, comment, and share. Also, drop your hottest take in the comments below of an earnings play you'll be watching this week. I'm Max Pitts. This is Trades and Gains. Welcome back, baby. Weekly Outlook Report. See you tomorrow for our daily Outlook Report. Have a great Sunday.